There is a substantial risk of loss associated with trading forex, binary options, stocks, or equities, collectively, asset classes. Only risk capital should be used for trading. Trading in any asset classes is not appropriate for everyone. Past performance is not necessarily indicative of future results. No representation is being made that investors will make profits, or will not sustain losses. Before trading in any asset classes, investors should consult with their professional broker, financial advisor, or financial consultant to determine whether trading asset classes is appropriate. Investors who trade in any asset classes should only do so if the capital used for this purpose represents funds that an investor can afford to lose without adversely impacting the investor's lifestyle. No trading strategy or methodology is without risk of loss. No trading strategy is risk-free, and no trading strategy can guarantee profits or freedom from losses. Investors risk losing the cost to execute any transaction, including associated commissions or fees. You should carefully consider whether trading in any asset class is appropriate for you in light of your investment experience and financial resources. Any trading decisions you make are solely your responsibility and at your own risk. None of the statements or materials in the Auvoria Prime chat rooms constitute a solicitation or recommendation to buy or sell.
So tomorrow is the 31st, last day of the month, where there's been a fair amount of juxtapositioning going on. The end of the quarter is, the end of December, but typically the end of many of different portfolio managers around the world is the 31st of October. Many mutual funds, that is their fiscal year end, where it's not necessarily a calendar year end. So that's typically why you've seen a little bit of higher volatility in almost all areas of the marketplace, whether it be futures, certainly currencies, commodities market, so forth. So just looking at real briefly on FinViz, let's just take a quick look at all the charts. Just go to daily, obviously, look at charts, finviz.com. I've shown the screen many times before, but I like to see the correlations going on. I always like to do it real time instead of having studied this before. That way I could just throw off thoughts to you guys as we sort of see it fit. Do note the complete rip in Fridays, and we saw some of the software and the automated trading systems that we have, or some of the alerts, really just, it was certainly crazy in the US dollar and euro. And I got a couple of charts to show on that to explain some of the movements that we've seen. But, there could be a myriad of factors as to why we've seen these movements. I am in the process of moving to Florida, where we've started our new company. And honestly, I haven't paid as much attention to this stuff this week as you guys have. So you're going to see me go through this real time with you together. And so that's a really big move by the dollar in one day, as you guys can see here. Obviously, that correlated into reverse movements in the euro, the British pound, but everything else didn't have quite the movement that we see among these three main pairs. This is sort of like pin number 1, 2, and 3, in my opinion, and everything else is, some sort of other row of the pins. And just view it like a bowling alley of pins. You have your center pin, and then depending on how much energy comes off the center pin when it's hit, there could be pin action to all other pins. It's kind of how I view this. But no surprise with the yen, we've had a pretty big move. We're sort of digesting some gains, or some drop, if you will, in the yen. Same thing with CAD. We've had a lift off. We're sort of digesting it here. Swiss franc sort of mired in the middle. Almost all-time highs as far as the last daily chart in the Aussie currency, so forth. But look at the continued decline in bonds. Right? We don't really want to pay as much attention to the 2-year note as we do the 30, 10, and 5. These are U.S. Treasuries, by the way. So, but look at just continued declines in this. As you would think with these declines, you'd have a rip in the dollar, but we still haven't seen it get past that real important 94.50 area. Right? And you've seen, obviously, inflation hitting a lot of other commodities globally for what it's not just what's going on for costs in this country. And a lot of it is just supply chain disruptions, as I've talked about ad nauseum. So I'm not going to get into that more. Surprising how freaking oats is just really rocking higher. Metals, sort of mired in hard to understand chart patterns. Crude's backed off a little bit. It's the first time we've seen more than a couple day back off in crude. VIX again dropping down as equities have been reaching highs. So we had a nice reversal, an all-time high set in both the Nasdaq, S&P, Dow, Russell, which is the mid to small cap index, has not made a new high. It's more of a murky chart in this particular case. So now that we sort of have like a general understanding of at least a macro view of what's kind of gone on in currency land, let's take a look at the news. Looks like we got French and Italian holidays on Monday. Bank holiday for Japan on Tuesday. So just by that general nature, there's probably going to be less volatility in the markets. Could be wrong, right? But generally speaking, a little safer, essentially out treading in deep waters. So ADP and obviously the big one Friday, you always sort of get like a little bit of a heads up here on what potentially is coming down the pike. Other than what this unemployment rate changes and looks like you're going to have with the U.S., I have no idea how this is going to shake out. So I just really, between the press conference on Wednesday, FOMC statement, right? I don't want to be trading anywhere around this. And if it's 2 hours before and 2 hours after, so be it. I think you'd want to be at least not accepting anything crazy or jumping into the marketplace an hour before, an hour after, right? In some cases, 2 hours. Hell, you could take the whole day off if you want. But the same thing with the morning, New York time. Remember, this time is different than your time. So your times will be different than this if you are not in the Pacific time zone here in SoCal. Always note all that. But we've got a lot of stuff going on all week. So just note that it's a big day in the UK as far as Thursday. Big day in the US and Canada on Friday. And then there's holidays and technically a big day as well in the US on Wednesday. So do note these times. Let's jump into, and actually, let me just go back. Let's just put this stuff back out here so I can get everything and show you guys. So I think it's important to, as I was talking to myself, in the AP community, this is where we are here. You can always see everything in news feed. A lot of these guys are real active. It's great to see all the Hawkeye guys like Brian posting a lot, which is cool. This is what the dashboard looks like. If you haven't spent any time in here, you can really, this is how you get into all your software that your licenses are active for, and then you can win AP Live. I don't know if you guys have been through all this. It still seems like we just haven't had enough of the chat groups migrated over to this. So, I mean, I would throw out a challenge for everybody to get integrated over here. But do note that we had that launch in Dallas of the One Trade Room. I have not met this Chris Cole guy. I know he's got a pretty good background. I haven't had a chance to talk to him yet. And then we've brought some new coaches in as well for Arrow. These guys have been doing really well. And then in addition to that, we have Flash that's been introduced. So take a closer look at all that. I probably more so than any beta startup have been really in the weeds on this one. I really like what I see. It's had very low drawdowns. Obviously, past performance is no indication of the future, right? But the important thing is the drawdowns have been low, provided that you have conservative settings or normal settings with it. So take a look at all that. Anyway, moving into the charts. And actually, let me get out of this screen. I'm going to show you guys this in a bit. It's actually a pretty decent post. Let's take a look. So all-time highs, S&P, as you can see here, closer to the Bollinger Band, the upper high. This is the index as a whole. NASDAQ, all-time highs. Typically, when you have pullbacks and move towards a breakout or the final quarter, some of the earnings have actually come out really good with a lot of these companies, so this continued to push up. It's the Qs. I'm not going into this too much. I've already touched on bonds a lot, but just here's a quick view from a daily chart perspective on the bond markets. Moving into the dollars, really what I want to focus on. So this was a big move in one day. So we're looking at almost $1. Not quite. It's crazy. So what happened? Well, it's a good question. We go back to the news. This is how I sort of do my autopsy of what took place in the market. Numbers were in line. It seemed to me from the perspective of this movement, we're probably going to take a run at 94.5. This has been the real big area. Every time we've come up against it, which has been about 4 times since we broke down into this area, we've probably got a good dollar of what I call a low volume node or a low volume area. Some people call it missing notches in the profile. Some people call it air pockets, zippers, whatever you want to call it. When you break above a certain zone and you don't really have anything in the way of it, oftentimes price will just totally rip to the next level. So this is something I don't want anybody getting caught in. And honestly, the problem with that is that many of the softwares obviously trade Euro US dollar, a lot of US dollar based pairs. Obviously, I don't know that I'd want to be in any trades that are shorting the US dollar if we get above this level. I've echoed this as sentiment from myself for almost the last 3 months. And it looks to me like they just want to go up and blast it to the upside, right? What happens up there, I don't know. I still think this currency should be down somewhere around 85. That's long term. But I think the dollar's gotten some lift, if you will, as a positive because of the fact that all of the idiots in DC can't seem to get this ridiculous crap package that should not be passed. And that's, essentially what's going on. They can't get it passed because it's full of pork. So I think that's breathed some life back into the dollar, hence pushing other currencies down. So just looking at the euro right near the edge, it's kind of one of those things where if we get under this level, we probably could just rip through it. I would not want to be long this. I don't care what softwares are sending out signals or Aero Trade Room folks or just people just trying to buy this edge of the cliff. If you don't feel comfortable with this breaking down or the dollar ripping up, stand aside. Remember, cash is always a position. Don't feel the need to try and catch the train as it just leaves the station in a lightning bolt. British pound, we're much more inside of a long base that we've built up through this entire area that warrants. Look at the weekly chart. You guys can see the tight base that's built, high sides, low sides, pretty solid support right here at the 35, 40-ish area, this little zone. Every time we've gotten down here, boom, packed back up, and then to the high side as well. Again, don't know that I'd want to be shorting this on a break above this, which I don't really see happening right now. It's possible. I do see us continuing to build more of a sideways base. So that certainly argues if you're trading anything related to this currency that you can take trades in this one. CAD, tight base down here. Don't see it breaking lower for any particular reason. You can take trades both ways. Yen, I think this is really the edge of a rocket launch that may take place. I would not want to be shorting this above this level. especially if it holds. Now we're looking at a weekly, so on the daily, you essentially got to get above this area, this 114.50-ish area. That's probably going to rip. Be on the long side, not the short, right? Dollar Swiss still long balanced, very tight, at least continuing to compress in this area. AUD USD up against a moving average, upper side of the Bollinger Zone, which is this teal colored line. Let's see what else. Eurogbp. Notice the long base that was built, the support that was broken. Every time we've come up against that support, we have not been able to get against it. So for those looking at the just under spot 85 area, it is probably, honestly, should be a yellow or an orange line printing here in terms of our I've shown this to you guys a bunch of times. This squeeze zone indicator is something that Dasan built. It's actually been really good. Neocurrency. Now that we've broken under this area, I should say, this is zone that I'm moving my cursor back and forth between this particular zone. We've broken under it. So now we've come up against it here. Notice it was resistance. After we broke support, became resistance. Now we have a lower resistance area, so we're continuing to compress. And I don't really have a good feel for one way or the other on this. So I guess you could take trades both sides, but you know, the true edge of the cliff is this one spot 6,900 area. If you're looking at the weekly, the bigger support zones down here at this spot 6730-ish area. UD CAD. GBP NZD still stuck inside the bounce. Even go back to the daily. Then we've broken under. I think a lot of this is in response to dollar's move on Friday, but pound's getting weaker in relation to the New Zealand dollar. Let's take a look at gold. Still compressing. Take a look at the coinage. Do note that the, I don't know if you could call it a passage by the SEC of the allowance, for lack of a better explanation. Essentially, they have allowed or passed the build out of ETFs that have Bitcoin futures in them. So keep in mind, these ETFs, which are managed by some of the largest ETF companies out there, like a State Street or a ProShares or a BlackRock, these are essentially mutual funds, but they trade as an exchange traded fund, same type of organization, though. It's just an actively traded using just a typical equity 3 or 4 symbol. But in the case of BITO, okay? I'm actually going to put this on the watch list as well because it is actively traded. It's not showing up. See what? Hang on one second. I'm going to double check that symbol. Got the symbol wrong. It's BITO. Yeah, here we go. So if you guys want to trade this, I'm going to start to analyze it. Now, the problem with this is that all based on futures. There is no purchasing of actual coinage inside this account. So usually when your stuff starts trading, you'll see me put a 4-hour chart on it or something smaller. Give me down to 1 hour. So there's no way to analyze this just yet. And honestly, the analysis really needs to start here. So just back to the daily on Bitcoin. Typically, these types of approval events like you're seeing are crescendo, or like what I like to call crest highs, which is just around the 66,350 area as far as the coin price, and it's backed off and so forth. So if we stretch this out, problem is that most of my analysis on this, just other than looking at just basic price action, it's mostly been incorrect. There's so many other factors in play here of how this actually trades. So I had a pretty good feel we'd break from this area. A pullback is a test, which you see here, and then it's launched up into the upper zone. I have, other than just news breaking, no explanation for what these two huge rips down were to run increased volume. And then we had a settling out. This, I can tell you, was based on the a lot of positive comments about just, bringing crypto into the mainstream and or getting these ETFs passed by the SEC. So maybe other countries will follow in some form. I don't follow a lot of that close. I learned from the grapevine kind of what's going on here. But it is interesting. So we'll have to take a closer look at some of these ETFs. This is Ethereum, all-time highs. This is sort of that baby with the bathwater thing. Cardano, these are the only ones I follow. I don't follow anything else. Did want to take a look at oil real quick. If you're looking at the daily, it's the first decent sized pullback in a while. VIX as well. Notice down near the lows. Remember, this is a volatility index. It's something you definitely want to keep an eye on if you are trading any symbols of any index on the MT4 platform. You always want to know what's going on with the volatility index. You have a significantly higher chance of losing money if you are trading not paying attention to a VIX that's somewhere up in this area. So this whole zone, and if I go to the weekly, which I think is a little better explanation, anytime you see, I mean, obviously this is a pandemic low in the first quarter of 20, right? We all, everybody's probably sick of hearing about this, but the point is that from a risk standpoint, just pure discussion of risk, just looking from a macro perspective, you don't really want to be trading a lot of size, right? When the VIX is this high, because that just means there's just whack moves in everything. So if you have begun to, which I know a lot of people in the Arrow Room have, they've begun to trade the U.S. indices, whether it be the Qs or S&P or the U.S. 30, or, I'm just not really a fan of something that's a little more concentrated. I would much rather be in like the NASDAQ Qs 100 or, something that's S&P based, which is my favorite because it's a broader index, it's more liquid, and there's better analysis that can be done on it because of the single fact this is the largest liquid trade thing in the planet. So the spiders, if you didn't know, is the biggest and the highest traded of anything on this planet. Now, obviously, you can make an argument that some currencies do trade more, and they're, generally the market's just trillions of dollars. I get, but in terms of just a pure shares traded number, maybe non-forex, it's the S&P. So, looking at the VIX, and you want to always, just note this. You could just follow. It's just a VIX symbol. Remember, this is not. This is just a volatility, essentially, the S&P, right? They have VIXs for the Qs and stuff like that. You can use like VYX if you want to look at other areas, but I just look at a broad measure of volatility. Now, when you start getting really, really low in this, and some of the numbers we're seeing have been some of the lowest that's been recorded in recent trading, right around this 15 area. I think complacency starts to move in as well. You can see we got the VIX. Typically during really big rallies, complacency sets in and everybody's like, oh, well, there's not a lot of volatility, and it'll drop down to the low teens, right? here way back in 18, we got to 9.25. So that's like real low volatility. But the point I'm trying to, of the left-hand side of this chart here, is when we got really low, what happened after that? You know, complacency set in, and some event happened, and boom. This is obviously an equity correction, and in a pretty big pullback, almost 10% in the first Q of 18. But just recognize it. You don't have to spend as much time dissecting stuff and analyzing it as I do. You can just glance at it and see, okay, well, VIX is low, or, holy hell, the VIX went up. The key thing is if there's some big move in the market, any market, and the VIX hasn't really moved that much, not saying discount it, but just general volatility hasn't picked up, which at some point will be some bananas numbers when some of these bubbles and equities start to pop a little bit, which is my suspicion into Q1 and or Q2 of next year. Could be delayed by a whole half a year, in my opinion. It could be rolling all the way to the end of next year. It's entirely possible. We'll just have to see how the charts look when that time comes of potential support down in those areas, relation to volume and the profile. What else do I want to talk about? Oh, so I got a question last week that was emailed to me by subscribers asking about just breakouts from a flag. And I was just posting through. There's a couple of guys that follow in TradingView. These guys do really good chart work. It kind of saves me the trouble from having to build all this, but I like to just use some of these guys to illustrate the point. This Ride the Pig guy is one of them. So I follow him, puts out a lot of stuff, but just pay attention to the stuff that's important, right? So this is a daily chart of the Euro US dollar. It's kind of like I showed before. Kind of looks like mine. It's a lot less stuff on here. So keeping it cleaner, just pure technical analysis. Each day represents a single candle. We had this was a big reaction, obviously, off of the pandemic. Coming into where things have sort of settled out more. We started building a base, right? We started compressing into a flag formation. Okay. And there's a lot of things going on, so that you could come up with a zillion reasons why this was going to break higher in just the the movement of it. But if you hit the play button, it shows you what played out in the markets. And I'll slide this over. So a lot of people say, well, I want to buy the breakout. Okay. If you want to be even more risk averse, essentially putting less risk, wait for it to test the breakout, right? So we broke out and we tested it again, and we lifted again back into the area, and we started to continue. This actually, if you really wanted to be on the safe side, this applies to anything: stock breakouts in currencies, commodities, all kinds of stuff. Wait for it to test again, and in some cases you'll be later to the game, right? In some cases you certainly will pay higher prices, but where very defined risk is, because your stop losses are right down here, right at this 1.08 8900 area, right? So you can see risk reward ratio was big. Okay, this is where he suggested you put your stop, which I would not do. I would have had to stop right under the lowest of this day, right here on the 25th of May. But the point is, it was a nice breakout. Initial target zones, obviously the high, right? So we came up to this point. This is where you're taking profits. If you're holding for a swing trade, you may even take profits as we came closer to that zone. And typically you'll have a little bit of front running where people are already selling in front of the zone. We haven't quite made it to the zone, right? And that happens a lot. So you always want to be, not greedy, but, take some off the table if you have a bigger size trade on. You can even argue to add to the pullback, because we're starting to build a base, and then we broke again. As a lot of people with less risk would wait for us to break and test against this little sort of mini couplet handle here, then for another lift. So this kind of gives you an idea of just, there's so many patterns out there to buy as far as breaking out. and so forth. So the question I got was, I was looking at an ETF, and it's a fund in a mix of currencies. Unfortunately, it's a Canadian stock, and I can't trade it per U.S. regulations. ETC is the symbol. Mix of currencies. The problem with a lot of this stuff, and why, there's all kinds of great stuff out there that you can trade. But you know me, you guys, I want to see something that just slightly hits the mainstream. So let's take a look at it. Walk you through how I analyze this stuff. Let's pull it up. And I'll take a look. Like utilities, is that right? First tech environmental, did I get that right? Problem with a lot of these Canadian stocks is the capitalization requirements by, like the Toronto Exchange or some of the others. These are really low. So I mean, it just the joke was, at least in the early days of cannabis, all these dope stocks that came public, is they go get listed on the Toronto or the, there's a whole bunch of other exchanges in Canada have like low requirements, but you have more exposure because there's a lot of natural resource, traders international following a lot of like small time Canadian stocks in whatever industry they're in, but it's easier to get listed on the Canadian exchange. And it does get some exposure, a lot more than the pink sheets would or some sort of NASDAQ bulletin board stock, which doesn't really get any exposure. Do keep in mind for the equities discussion portion of this, the real sort of momentum, if you will, as an early investor in any type of penny whatever or low price stock. Just understand the most famous saying from William O'Neill. This is one of my gods, at least in my book. Founder of Investors Business Daily. He's got tons of books written about him. And and one of his most famous lines is, "A low price stock is low price for a very good reason." And if you want the stock to take off, which it certainly could, you've got to have it above $3 or $4 a share, because even the smallest cap funds, right, the big institutional investors, forget about the hedge funds, we're just talking like mutual fund land, the smallest of mutual funds or micro cap funds still have share price limits in their prospectus. So they want to invest in them possibly, but by prospectus, many of them are not allowed to unless they're $3 or $4 because of the liquidity, right? Now, in this particular case, this one's pretty actively traded. So if we click on, let's go back into the chart. We click on a daily here, and you can see what's going on. So sell off, and this thing was up around. So we notice we've compressed, tight balance back and forth. Look like we may break out here. I don't know what these guys do, whether their business model is good or not, but that's kind of what I look at. You want to see increasing revenues, so forth. But the problem with a lot of these utilities and these, these little teeny gold stocks and miners and all that stuff, they just don't get the ramp that they do if gold's not rocking, right? Not necessarily gold's not going to be dragging this one around. I don't know what the hell is good catalyst that's going to make this move. We got some strong buys, but there's all kinds of cool analysis you can do. And many of you guys already know a lot of this stuff, so this may not be news to you, but it's just one of the beautiful things about trading view. Essentially the pro version is less than $20 a month, and I could damn near do the kind of analysis that I can do on Bloomberg and save myself $2,000 a month. It's freaking crazy. These guys are the ones I wish would go public, because I would be a buyer of that stock. This trading view is killing it right now. But it just gives you an example of how I analyze stuff. So looking at the market profile, I'm just not going to bore you guys with today, because I wanted to keep this to 45 minutes today. Any other questions? Anything, you guys? a look. Maybe it's not listed. And that's why I was looking at the wrong stock. It's possible. So, all right. So everybody have a good week. Don't forget about all the fun news stories next week. And as we move into next week, we've got just a lot of news. There's landmines everywhere here. So just be aware of this. Maybe one of those weeks where you got to pay a little closer attention to this. Sometimes I'll just print this off if I'm actively trading all kinds of stuff and, have all these up. Make sure you got these times synced to when the news event goes off as far as yours. You're not looking at mine. Don't print my screen off. Set yours up for yourself. Anyway, happy Halloween for everybody. Boo. I recommend always check your kids' candy. Remember the old days where they'd find stuff in the candy? Don't forget about that. But everybody have a good week. May the ghouls be with you.